Tran, co-founder, and good morning, everyone. I'm Trinity Tran, co-founder and lead organizer of the California Public Banking Alliance. And before we get started on today's briefing, I wanted to provide some background on CalAccount, a no-cost, free banking program that would be available to all Californians. CalAccount would offer zero fee, zero penalty debit accounts and debit cards. It also offers online bill paying, direct deposit, and it creates an infrastructure for account holders to build credit. We all know that banking is foundational to creating financial stability, but basic banking access from cash checking to debit card transactions is too often costing millions of Californians their hard-earned money. Meanwhile, banks are making profits in the billions from fees and penalties, frequently from communities that can least afford it. So today you'll hear how much we need CalAccount and how feasible it is to set up. But first, I want to go over some of the history of what brought more than 250 community organizations and labor unions to support the creation of the CalAccount. In 2021, Assemblymember Miguel Santiago authored AB 1177, the California Public Banking Option Act, which created the CalAccount Blue Ribbon Commission. And at the end of 2021, Governor Newsom signed AB 1177 into law, and that convened the Blue Ribbon Commission that's led by the State Treasurer's Office to explore the implementation of the CalAccount program. And we are now at a critical juncture as the Blue Ribbon Commission prepares to review a report that it commissioned and make recommendations on the next steps for the CalAccount program that could really change the lives of millions of Californians. So let's get right into it and kick off today's briefing. If you have questions, please drop them in the chat and we'll read them aloud and address them at the end after the final speaker. So with that, I'd like to introduce our first speaker, and it's always an honor to introduce Assemblymember Miguel Santiago, author of AB 1177.
Hey, thank you, Trinity, and everybody else who's on here. I can't emphasize enough how grateful I am for the work that you've did in passing CalAccount, and then today making sure its implementation. The report today is going to show exactly what we've always said, which is it's feasible and it's going to help people. And make no mistake about it, it's absolutely needed. And I want to share a little bit about why I took this on. Having grown up in Section 8 housing and seeing people struggle to pay their rent, put food on the table, it made no sense to me that if you're making minimum wage in the communities that are surrounding us today, when I represent folks in the legislature, it made no sense to me that you're going to get charged $3 for a penalty fee, $3 fee here, $3 fee there, 30 for overdraft, or whatever it may be, when people are struggling. Now, most people who, if you're making $1 million a year or doing well beyond that, may argue that $30 here and there isn't a big deal. Certainly the corporate system of banking would, but if you're struggling to pay rent and you're making a few $100s a week, $30 is a big chunk, and it can make the big difference between paying groceries, putting groceries on the table, or having to make the tough decision to pay rent and forego some of the nutrients that you may need. I can't emphasize it enough. It's feasible, it's doable, and more importantly, it's absolutely and much needed in our communities to be able to do a free banking system for people who are struggling. Y lo digo muy breve en español. La importancia de tener un sistema de bancos donde no cuesta tener nuestros dineros, y no importa qué hace uno cuando uno está de bajo ingresos. Es muy difícil tener un costo de $3 o una multa de $30 simplemente por no tener suficientes dólares en el banco, y eso es la diferencia de poder poner alimentos en la mesa o pagar la renta. Entonces es muy importante, y ahora vamos a ver que no solamente se puede, pero es muy necesario para nuestras comunidades tener un sistema de banco que no cobra y no multa a los que más necesitan de sus ingresos. Gracias. Thank you very much.
Thank you, Assemblymember Santiago. And just a quick note to reporters to please use the Q&A function if you have questions, and we'll address them at the end of as we wrap the briefing. Once again, thanks to Miguel Santiago. I know you've been a long champion of public banking for many years, and thank you for your really incredible and tireless work and commitment fighting for the people. Appreciate you. So next, I'd like to introduce David Huerta, president of SEIU California and SEIU United Services Workers West. SEIU California represents more than 700,000 workers in public service and healthcare, long-term care, childcare, and service work. SEIU California, along with the California Public Banking Alliance and Rise Economy, were co-sponsors of AB 1177 and remain key partners in the CalAccount Community Coalition. Welcome,
Great.
David.
Thank you, Trinity. Thank you for the introduction, Trinity. And as you said, my name is David Huerta, president of SEIU California and SEIU United Service Workers West. Our union represents more than 700,000 workers across the state. A majority of them are immigrants and workers of color, from janitors to caregivers to college student workers. Our members are among the millions of Californians who pay billions of dollars in fees to banks. We know that being represented by a union is one of the best ways to close the pay gap for women and for people of color. And our union has been a leader not only in organizing workers, but also supporting innovative policies that directly lift up workers employed by low-wage industries. For generations, the working class, poor white, and communities of color alike have been excluded from mainstream financial services. Our nation has made strides in creating safeguards against redlining, but the fact that the unbanked or underbanked are mostly people of color shows we have a way to go to create a more equitable financial system. You've probably heard that federal regulators are trying to limit banks, junk fees, but the banks are fighting these limits on their fees. Creating CalAccount is an opportunity for our state to once again lead the way, this time in making real progress towards closing the racial wealth gap. By saving millions in fees and penalties, Californians can keep more of their hard-earned money to meet their basic needs, as well as create financial stability for households and our communities. That's better than sending billions of junk fee dollars to large multinational corporations. Because in the end, we're all paying for the price of mainstream banks' failure to serve historically oppressed communities, immigrant families, and families of color. As you'll hear from the report authors today, unbanked and underbanked Californians will save up to $1,400 a year when they have access to a fee-free banking service option like CalAccount. Without the worries of fees eating up their paychecks, families will have the opportunity to build credit and lay the foundation for wealth building. SEIU is proud to join more than 100 community organizations and labor unions to support CalAccount. It's a common sense solution that ensures all Californians have access to free basic services and financial stability we all need to support our families and local economy. With CalAccount, our state can lead in the dismantling systemic racism in our financial service industry and make right the discrimination and institutionalized racism Black, Indigenous communities of color in California still face today. Thank you.
Thank you, David, and thank you to you and SEIU California's support and leadership on CalAccount. And now I'll turn it over to Garrett Rapsilber of HR&A Advisors. HR&A Advisors is an employee-owned company advising visionary clients on how to create vital places, build more equitable and resilient communities, and improve people's lives. Over the past 50 years, they have provided a diverse range of clients with strategic guidance, economic analysis, and implementation planning. They are a leading analytical firm on the topic of public banking, having conducted feasibility and planning work for major cities like Seattle, Philadelphia, San Francisco, and other cities. And thank you, Garrett. Welcome.
Thank you, Trinity. Happy to be here. And good morning, everyone. Just to start, I want to make sure that just take a quick check that everyone can see the screen. That's up. Okay, great. Wonderful. Well, then we can dive right in. As Trinity said, my name is Garrett Rapsilber. I'm a director with HR&A Advisors. We're a public policy and economic development firm founded in LA nearly 50 years ago. The firm has really been a pioneer on work around public banking. And as Trinity mentioned, we've conducted numerous feasibility and financing studies for municipal banks, whether it be from San Francisco to Seattle. And in 2021, I co-authored an economic and feasibility analysis of AB 1177, as we learned that legislation was instrumental in establishing the framework for CalAccount. And so today I'm here to talk to you about the findings of our report, The Case for CalAccount, a statewide solution for equitable financial well-being, which serves as an update to that foundational study. Our study explores both the need, economic implications, and feasibility of this banking solution. And in general, we found three main findings. One, that exclusion from the banking system is an enduring issue, and that it's characterized by deep disparities when you look at the data across many dimensions, whether it be race, gender, income, and geography. And it's evident to us that new solutions are required to tackle this problem. Two, financial exclusion imposes significant costs on residents that in turn impose significant costs on society and the California economy. And three, a program like CalAccount can not only address these issues, but we find that it holds a reasonable promise of success. Today, I'm going to provide more context to each of these points, but I highly encourage all of you to check out our full study, which has a wealth of detail on the characteristics and costs of financial exclusion and the feasibility of a CalAccount program. To start, I wanted to give you a sense of the scale of the problem of financial exclusion. Today, 1 in 5 California households can be considered unbanked or underbanked. That means a household either does not have a checking or savings account, or they might have this account but still rely on alternative financial products, whether it be check cashing, pawn loans, etc. Additionally, 70% of census tracts in California lack a single bank branch. And then, if you look at this figure below, going back all the way to 2009, when you look at the rate of households that are considered unbanked or underbanked, it has not significantly improved to today. It's evident that the existing regulatory and banking solutions do not address the full scale of the problem. And lack of banking access hits Californians differently based on who you are and how much you earn. Deep inequalities and inequities persist, and they're part of a broader lack of equity and economic opportunity and wealth building for Black, Latino, and low-income households. And just two examples of these inequities in action. Black and Latino households are 3 times more likely to be un- or underbanked than their white counterparts. And a full 60% of the unbanked in California are households making less than $30,000 per year. We talked about impact. These are households that saving even a few $100s is a huge benefit. And we actually believe CalAccount can save households even more than that. As CalAccount can help households save on fees such as overdraft, avoiding minimum balance charges, and necessitating or removing the necessary use of things such as payday loans and check cashing. And cumulatively, we find that if all unbanked and underbanked Californians could participate in a CalAccount program, it could save Californians $3.1 billion annually. This translates into approximately $1,300 average savings per household. And that's just an average. We've heard from individuals with lived experience that they often pay more than this in fees, meaning that CalAccount could be all that much more impactful for them. But this 1,300 is still significant. And I have 2 data points to put this into context. One, that today in California, approximately 500,000 households are behind on rent. The average household owing just $2,600. CalAccount could fill half of that gap. And then there was a recent statewide study of unhoused individuals from UCSF. And that study suggested that a low subsidy of just $300 a month could have kept 70% of households off the street. CalAccount could perhaps fill a third of that monthly need. We then took our analysis a step further to understand what households might do with this savings. And unsurprisingly, we found that households would spend much of their savings on basic needs like housing, healthcare, and everyday goods and services. This is spending that would mostly be local, and then this spending staying in California through economic multiplier effects would in turn stimulate the California economy with $5 billion in new economic activity. So that $3.1 billion in savings translates into $5 billion an impact on California's economy. And this will mean, in turn, more fiscal revenues to the state through sources such as sales tax. Our research also suggests ways CalAccount might create savings to the state. For example, the state currently has at least $1.5 billion in active contracts for distributing benefits through programs such as unemployment insurance and CalWorks. And there might be duplication in the disbursement of those benefits that could be rolled into a CalAccount program. There's also consideration of indirect savings. As the financial health of households improves, as they avoid paying these punitive and extractive fees, there's a possibility that it lessens the need for other state social services. For our study, we were tasked with understanding the need for CalAccount, but we were also tasked with understanding whether or not CalAccount, as designed, has a reasonable chance of success. So to assess feasibility, we looked at three things. We first looked at the features that the legislation requires CalAccount to have. We analyzed how other state programs might already provide similar services, thus showing that the state has the needed experience and capacity to administer a CalAccount program. And finally, we analyzed what network of private sector firms provide similar features to CalAccount and which ones the state already has relationships with. Based on this process, we determined that the state has the capacity and strong potential private partners to provide the expertise needed to implement CalAccount in a way that is both effective and user-friendly. The state has a proven track record of managing large-scale financial service programs with private firms, such as CalFresh, CalSavers, and CalKids. The state also already partners with numerous financial service providers who specialize in the various features we're talking about. And these partners have expertise in areas such as banking, card networks, and digital access. And finally, there's a clear path to scale CalAccount. California administers the nation's largest public benefit system with over 21 million claimants in just the past decade. These existing programs provide a strong user base to rapidly achieve critical mass and impact. And so to conclude, the CalAccount addresses a clear societal need. It can create significant improvements in the financial well-being of participating households, stimulate the economy, and it has a reasonable chance of success as a state-administered program. Thank you.
Thanks so much, Garrett, for presenting the findings of your report today. And I also want to share with those joining us today that the report will be available on the HR&A Advisors website. If someone can confirm and drop the link, the direct link in the chat where people are able to download the report, that'd be much appreciated. So next, I'd like to introduce our speaker, Sherry Williams, a member of SEIU 2015. She is a caregiver based in Modesto, California, who will share with us some of the ways that the lack of free basic banking services has impacted her. Welcome, Sherry.
Thank you, Trinity. Good morning. My name is Sherry Williams. I live in Modesto, and I'm a proud member of SEIU 2015. I work 2 jobs as a caregiver, one through an agency and another in a home care provider. Caregiving is a difficult work, and while it's a job I love, the pay is low, so I have to watch my expenses carefully. But no matter how hard I try or which bank I go to, banks are charging me left and right just to do the basics. The fees only seem to be going up. Most recently, a bank charged me $32 in an overdraft fee because it was taking my paycheck direct deposit days to clear. When I opened the account, the bank told me I had an overdraft protection up to $300, but I still was charged the fee. I'm also having to keep at least $500 in the savings account, or else the bank charges me. And if I ever transfer money from the savings to checking or checking to savings, the bank hits me with another fee. I've had another bank account that the bank closed on me, and there's another where I had to pay between $15 to $20 a month just to have an account. For a caregiver, the monthly fee amounts to an hourly pay, just so that I can have a bank that will hold my money and for me to have a debit card. This might not seem like a lot to most people, but for the money I need to buy groceries, gas, and bills, it really is upsetting that banks charge me all these fees when those with a lot of money can leave their money in the bank as long as they want without paying charge fees at every turn. I support the CalAccount program so people like me can finally get out from under those fees that the banks are charging us whenever we want to use our own money. CalAccount would go a long way in saving me money that I work for so hard to earn because I know I want to be charged. No, I do not want to be charged any fees. Excuse me. I look forward to signing up for this much needed program.
Thank you, Sherry. Thank you for your comments. And for our final speaker, I'd like to introduce Jyotswaroop Bawa, Executive Director of Rise Economy. Rise Economy is a coalition focusing on economic and racial justice and the creation of financial services systems that meet the needs of communities.
Hi, good morning, everyone. I'm Jyotswaroop Bawa. I'm Chief of Campaigns at Rise Economy. Thank you for your interest in this research and policy approach. Rise Economy is a coalition of over 300 organizations from across the state, many of whom consider themselves to be financial first responders in BIPOC communities. Our member organizations are supporting communities where banks, banking regulators, and government at large is failing them. With 30 years of organizing communities to hold financial institutions accountable, we believe it is time to build an alternative. We cannot rely on the institutions that have long ignored the financial instability and inaccess that exacerbate the growing wealth gap in our state to suddenly become the ones to rectify the issues. We need the state to be innovative, and CalAccount is just the thing. You have in your hands some important research and data today, and I'd like to tell you a little bit more gleaned from Rise Economy's Economic Wellness Promoter Program we have in Los Angeles. We support low-income families with financial systems education. To be clear, the families here know how to pay their rent, they know how to pay their cell phone bill, and they know how to budget for groceries. But what they might not know is how to shop for a low-interest credit card, how to avoid predatory lenders, or they may not feel comfortable by account. And that's because traditionally historically, banks have been unfriendly to people in their communities. You'll not be surprised to hear that with the legacy of discrimination and redlining, there are still significantly lower number of branches in communities of color than in white neighborhoods. In fact, just during the pandemic, 300 bank branches closed doors in Los Angeles alone. 60% of these branches were in Black and immigrant communities. But also, when there are branches, they do not employ leadership or staff that look like or speak the languages of their customers. So it's no surprise to us that year, they are refinancing more predatory debt than making new loans to people. Because during the pandemic and economic crisis, families turned to the only capital available to them. The experience of the families our promotoras are working and supporting, and our member organizations work with, confirms the research today, the fact that exclusionary practices and policies are still embedded in how traditional banks work. CalAccount, on the other hand, will provide families with safe financial products that will indeed become the foundation for financial stability of whole households. The program will bring no-cost banking services to those working families and individuals that banks have refused to support for decades. This program will bring safe financial services where none exist. The families we educate via the Promotora program can have the $50 to $80 or $100 back in their pocket, and that they otherwise would have paid to check cashers, bill pay services, or in ATM fees and the like. This is essential saving and necessary step that will allow families to avoid the profoundly. Thank you for your interest, and we hope you find this to be an innovative solution.
Thank you so much, Jyotswaroop, for your closing today's briefing. And again, if anyone has questions, please use the Q&A function on Zoom. And I just want to wrap by re-emphasizing some of the critical points from HR&A's report. And the economic impact of CalAccount cannot be overstated. By saving Californians an estimated $3.1 billion in fees annually, CalAccount is projected to inject nearly $5 billion into the state's economy each year through increased household spending. And this boost would mainly benefit local economies. It would drive growth in critical sectors like housing, healthcare, everyday goods. CalAccount is expected to create thousands of jobs, with 25% of them paying above the California living wage. And as the data points out, it's clear Black households are 3.5 times more likely to be underbanked than white households. And low-income households are vastly overrepresented among the unbanked and underbanked. And geographic disparities also reveal banking deserts, both in rural and urban areas, where 70% of census tracts lack physical banking outlets. And these inequities demand a solution like CalAccount. So we'll be addressing some of these critical issues at the upcoming commission meeting. So stay tuned for details on the CalAccount Blue Ribbon Commission hearings happening live and virtually on July 18th in Los Angeles and Sacramento. So that wraps our briefing for today. And thank you to all of our speakers. And for all of those of you who have joined us, have a great rest of your day. Yes, it looks like we've got one question here from Kathy Anderson. Hi, everyone. Thanks for taking questions. Sherry, what's your age? Can you describe your living situation? Do you own a home, do you rent, or do you rent an apartment? Do you have a family? And can you describe your family situation? Sherry, are you able to share?
Talking to me?
Yes.
Oh, right now I'm a live-in care provider for another elderly person at 77. I lost my housing due to my mom passing away in 2023 as a live-in care provider. And that's what's happening to all our care providers that live in, because we're not allowed to keep a house but as live-in. It's against the law. So they should allow us to have this, because we lose everything, our housing. We have to put our stuff in storage, and we have to end up living with someone else. So we don't have our personal items with us. This happens to a lot of our union sisters and brothers here in the state of California.
Thank you, Sherry. I truly want to thank you, Sherry, for sharing your experiences. And unfortunately, as we've heard in our town halls and community forums that we've held over the past few years, millions of unbanked and underbanked Californians share similar stories. Thank you, Kathy, for your question. Do we have additional questions? All right, well, thank you so much all. Again, this wraps our briefing for today, and really thank you speakers for taking your time, and hope you all enjoy the rest of your day.